Strategy kept STRC's annualized dividend at 11.5% for a third straight month. The bigger issue is how a near-par preferred stock became a funding machine for one of the largest corporate Bitcoin strategies. Strategy is the hook because the confirmed event creates a specific pressure point. STRC traded just below its $100 par target in April, with the volume-weighted average price near $99.76. The measurable anchor is 11.5% yield, and the story turns on preferred yield rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The instrument launched in July 2025 at a 9% dividend rate and now represents a roughly $6.4 billion notional product. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Strategy and STRC sit inside a process where BTC funding can change the readout. The baseline also defines the boundary. 11.5% yield is usable evidence, while anything beyond BTC funding still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where strategy becomes useful. STRC adjusts its dividend monthly to encourage trading around par, reducing price movement while raising capital that can be deployed into BTC. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is par value, which is why 11.5% yield is a signal rather than decoration. That is why this segment spends time on par value before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Income-focused investors, MSTR holders, and Bitcoin watchers are affected because the structure links preferred stock demand to ongoing BTC accumulation. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to STRC and strategy, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. The open risk is whether the model stays stable if Bitcoin falls sharply or if STRC liquidity thins around the par target. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is the shareholder vote on semi-monthly dividends and whether STRC keeps trading close to $100. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need strategy or relevant market participants to show follow-through around BTC funding, not only reaction around STRC. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for strategy is concrete. The next signal is the shareholder vote on semi-monthly dividends and whether STRC keeps trading close to $100. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect 11.5% yield to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to 11.5% yield, preferred yield, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.